Hello everyone, and welcome back to The Pulse, where we take a closer look at what's happening across the real estate markets in Greater Vancouver and the Fraser Valley. I'm Susanna Gonsalves, and back again with me today are both Brittany Reimer and Alan He. Now we're on location today at Block Residences in downtown Vancouver, right at Cambie and Robson, and there's a lot happening here right now. The presentation center has just reopened with 2 brand new display homes, along with the debut of a floor plan that hasn't been released before, and just in time for the World Cup.
Yeah, welcome everybody. It's a great time to check it out. There's new pricing, limited time incentives, and a design upgrade with savings up to $80,000. It definitely feels like more of a compelling offering compared to even just a few months ago.
And yes, great to be here. And the updated display home really brings that hotel-inspired concept to life, especially with the Rove Concepts collaboration. You've got fully furnished interior, built-out kitchen islands, and a more complete vision of how the space actually lives day to day.
Yeah, and that's really what stands out. Projects are no longer just selling plans, they're selling a finished lifestyle. So before we dive deeper into what we're seeing on the ground, let's take a step back and look at what's happening more broadly in the market.
Yeah, we should do that. Now, we haven't done the macro update in quite some time. Now, given the recent rate hold, I think it's worth just digging into and talking about.
Yeah, let's dive in. Why did the Bank of Canada hold its policy rate at 2.25% at the end of April for the month, for the 4th consecutive month?
Yeah, there's several factors at play right now, basically pushing up against each other. On one hand, we have increased fuel costs and household expenses pushing inflation up. But on the other hand, we have trade uncertainty and global economic uncertainty with a sluggish economy here in Canada. With this, holding rates around current levels makes sense.
Yeah, that's right. Though headline inflation has risen from 1.8 to 2.4% in March and is projected to near 3% in April, most of that is attributed to energy prices rather than other goods, housing, for example. Now, that's something that the bank will be watching really, really closely.
Yeah, after more than a year of inflation sitting close to 2% target, the rent increase in gas prices alongside still elevated food costs, households continue to feel the pressure.
Yeah, it's true. And the bank is taking a flexible wait and see approach. While they are holding rates to see if oil prices ease and trade conditions stabilize, they know we also need to kickstart our economy. So they don't want to raise prematurely, but are prepared to respond either way.
Yeah, and higher oil prices could mean consecutive hikes if inflation broadens, while weaker trade conditions could bring cuts. Now, on GDP, stronger energy revenues could offer some support, but higher rates would still act as a brake to the bank to bring inflation back to target.
Speaking of growth, according to Statistics Canada, the economy grew for a 4th consecutive month in February, led by a pickup in manufacturing as auto production increased again. That said, momentum is slowing. Early estimates suggest March was flat, putting Q1 growth in at 1.7% and Q2 largely expected to be about the same.
And how does Canada's trade relationship influence the bank's future policy decisions?
Yeah, well, the bank sees U.S. trade policy as the key source of uncertainty right now. We're already seeing weaker exports in sectors like auto, steel, and lumber. If tariffs expand, growth takes another hit, and that could push the bank towards rate cuts to support the economy. Now, on the ground, it's already showing up. Slower activity, softer hiring, and businesses are pulling back. Employment seems to be holding steady, so thankfully we're not seeing as many cuts, but we're also not seeing growth either. Capital lending is also tight right now, so the bank's basically watching to see how deep the impact goes before adjusting rate.
Yeah, that's right. And according to the Bank of Canada's latest monetary policy report, growth is expected to remain modest but steady. Now, inflation has been revised higher in the short run due to those increases in energy costs, but it is expected to be back to target by early 2027. Now, the bank is clear that both forecasts remain reliant and sensitive to assumptions around oil prices and trade policy.
Thanks for the macro update. Now let's switch gears and take a look at the pre-sale market. Well, we are officially in full spring mode, and how has the spring market actually shown up for us this April, or has it?
Yeah, great question. It's beautiful out. We're in spring, which is amazing. Spring has sprung, but the pre-sale market is still a little bit in hibernation, unfortunately.
Yeah, that's right. We did see 3 projects come to market in April, which is up from our earlier prediction, but all were townhome developments. And when you look at the actual number of units released, it was still very limited, just 35 homes in total.
It's definitely a low level of homes, but with current pre-sale inventory still struggling to be absorbed, it makes sense that developers ain't looking to add more supply right now.
Yeah, absolutely. And given that these are townhome projects, it's likely they're coming to market later in the cycle as they near completion or construction milestones rather than reflecting a broad push from developers to launch into the current market conditions. Now, that said, there still is a variation strategy. One project has a longer pre-sale horizon with completion expected by the end of the year, while the other one is a pre-sale opportunity in the Brookswood area where development is still quite limited.
Yeah, pre-sales in Brookswood, not something we've talked about before.
I agree.
What's the story?
It's a very unique offering located in a predominantly single-family home neighborhood. Bromley and Brookswood by Leon Homes offers customizable townhomes. Buyers have the ability to select from a large range of upgrades to appliances to finishes to smart technology packages, millwork, and the list goes on.
The customization piece explains why it needs to be pre-sold in the first place.
Yeah, it's not something you see very often in the pre-sale space, but if there is time for developers to get creative with offerings and explore new neighborhoods, it feels like it's now. Buyers are being more selective, so projects need to do more than just come to market. They need a story, a sense of place, and something that feels tailored, especially in areas where demand is still being built from the ground up.
Yeah, and it's no surprise that even with 3 townhome launches coming to the market in the last month, all targeted towards end users, they were all located in the Fraser Valley, where generally affordability is less of a stretch compared to the Greater Vancouver market, and it is a more realistic way for buyers to enter into the marketplace.
Yeah, that makes sense. And where do we land on absorption for those launches?
Well, all 3 projects launched in mid to late April, so it's a bit premature to fully gauge, especially with townhome product where the decision-making timeline tends to be a little longer given the larger purchase commitment compared to condos, for example. So technically we're sitting at 3%, which is basically 1 home, but I think the real number is slightly higher than that, as the homes that firm up in the next couple of weeks coming from the activity of the launch will result in a few more deals.
Yeah, and that's still well below our 5-year historical average, which is closer to 30% of inventory launch in April, which has typically been absorbed in that same month.
Was there at least an expectation of the increased activity heading into May?
I mean, not really. We're only expecting 1 townhome project to come to market next month with just 15 units. The Signature in Maple Ridge is anticipated to begin pre-sales in May.
Yeah, that's right. The project features 3-bedroom townhomes ranging from 1,400 to just over 1,500 square feet with either tandem or side-by-side garages. Each home includes a great sized backyard, which is always a nice added bonus for townhouse product and a reason why people prefer townhomes.
It really feels like a takeover of townhomes these past few months. How many concrete versus wood frame launches have we actually seen so far this year?
Yeah, I mean, the reality is we haven't seen a single concrete launch so far this year. Townhomes have clearly taken the lead in terms of project launches, making up close to 80% of the total release, with remaining share being wood frame low-rise condo buildings.
Yeah, and of course, we know that concrete tends to be a lot more units with pre-sale tests in this market. That's why townhomes are really the flavor of the day, because it's just way more digestible, way more feasible, and therefore just way less risk involved for our developers. So we expect that to continue.
Yeah, and you know what? Like the townhouse market, like you see absorption wise, they're absorbing better than wood frame condos. So, it's like if there's an opportunity to kind of slip in there, people want finished product. That is one thing we're seeing across all of our projects. Is just like something 2 to 3 years out is really challenging right now. But if you have a building that's completing within the next 60 to 90 days, there's actually activity there. And I think that's the same for the townhouse market, which is, they're obviously moving ready within, 90 to 120 days, typically.
Now, even with a lot of completed inventory still needing to be absorbed, including concrete product that is being discounted heavily to move, the bigger issue is what is not being replaced in the pipeline. CMHC notes that ownership supply is thinning as condo sales weaken and financing remains tight, and Metro Vancouver's own housing gap analysis points to a sharp shortfall between recent completions and longer-term need, which suggests a much thinner supply of projects completing in the 3 to 5 year window.
Speaking of completed and standing inventory, let's see what's happening on the resale side of the market.
Yeah, that is a great segue, Alan. Now, what did we see in terms of activity in sales across Greater Vancouver and the Fraser Valley in April?
Yeah, sales increased month over month with stronger growth in the Fraser Valley at 11% compared to nearly 4% in Greater Vancouver. However, activity remains well below the 10-year average, down over 38% in the Fraser Valley and nearly 23% in Greater Vancouver.
And on a year-over-year basis, how does that compare? I felt like the sales were subdued this time last year, but we're in a worse position now.
Now in Greater Vancouver, there's a slight decline of 2.5%, while the Valley saw an increase of just over 7% compared to last year. On a year-over-year basis, sales are largely being driven by the detached segment across both regions, while multifamily continues to lag. Now in the Valley specifically, detached home sales are up 25% year-over-year. Townhomes have increased by 3.7%, while apartment sales have declined by nearly 14% over the same period. Last month, I told you I was paying closer attention to that detached number of sales, as that tends to be a leading indicator. It was nice to see detached continue to get stronger. I don't think we can say we're in recovery mode just yet, but I'm cautiously optimistic as we continue to move through the spring market.
Yeah, and the Fraser Valley remains more attractive from an affordability standpoint, as we know, especially for detached buyers. And that value proposition seems to be what has been supporting relatively strong numbers on the single family side in sales.
There are so many opportunities in every market right now. Can you walk us through last month's active listing data?
Yeah, as we move into spring, total listings increased by roughly 7 to 10% month over month across both regions, while remaining relatively in line with levels observed from last year.
And what does this level of inventory suggest about overall market balance compared to historical conditions?
Oh, good question. Now, in Greater Vancouver, total listings sit about 16,000, nearly 38% higher than the 10-year seasonal average for the month. In the Fraser Valley, total listings are approaching 10,000. That's roughly 45% above the historical norms for April, so quite elevated.
Yeah, and so new listings are also trending above historical norms, though they've eased slightly over year, down 2.4% in the Greater Vancouver area, 5.7% in Fraser Valley. Now, this is suggesting that while overall supply remains elevated, the pace of new inventory entering the market is beginning to slow down.
That's a great point, Britt. So where does that leave the sales to listing ratio across both regions?
Yeah, the sales to listing ratio in Greater Vancouver sits at 13.5%, while the Fraser Valley is at 11%, so still quite low overall.
Yeah, and there's been some negative price adjustments observed across both of the regions. Prices declined by nearly 7% in Greater Vancouver and about 7.5% in the Fraser Valley market, reinforcing those softer conditions in both markets.
Yeah, true. Year-over-year price declines were observed across all product types and across all markets in the Fraser Valley, and almost the same story in Greater Vancouver, with only one exception for townhomes in North Burnaby, which posted a slight price increase due to lack of townhome supply in that market overall.
With the price declines seen pretty much across the board, I think this is our cue to switch gears and look at the rental market.
Yes.
Hopefully it's more positive. We'll soon
Absolutely.
find out.
Yeah, let's jump into the purpose-built rental market. How many projects completed in the month of April?
In April, one rental project completed, adding 91 units to the market. The Elms by Strand completed over the month and leased over 20% of their units.
Yeah, so in terms of completions, activity was in line with the expectations we predicted last month. Now, how does this compare to the rest of the year?
Good question. This market is the lowest level of rental completion so far this year, but it doesn't signal a slowdown in activity. As spring arrives, leasing activity has picked up, and with increased tours and interest as renters become more active in the market.
Yeah, that makes sense. We're getting into more moving-friendly weather, and since people typically move this time of year, a lot of those leases are now coming up, which naturally drives more activity.
Yeah, and that's a great point, Suze. And we're seeing that play out across all other purpose-built rental projects as well. A lot of prospective tenants are moving at the end of their one-year lease. So it's not necessarily new demand coming into the market, but more internal movement as renters look for better value compared to what they're currently paying.
Yeah, and the appeal of a brand new building is definitely there still, especially when it's offered at a more competitive price, even comparatively speaking to older products. So who could really pass that up?
Yeah, exactly. Shinier is always better, right?
I guess so, yeah, for sure.
Looking ahead to May, how many projects and units are we expecting to come to market?
Yeah, we're expecting 3 projects to complete in May, bringing a total of 351 units to market. All are wood frame developments and located from Abbotsford all the way to Vancouver East, and with none exceeding 150 units in size. Of course, smaller scale projects tend to reach stabilization much faster than large tower developments. With pre-leasing already underway, we can expect the majority of units to be leased out by year end, assuming strong activity level throughout the spring and summer and demand of the product offering.
Yeah, that's a really great point, Ellen. Now, is there anything notable about the projects or their locations that stands out to you?
Yeah, absolutely. Let me dive into it a little bit. So, Avira by Polygon will be the only active purpose-built rental project in Richmond and expected to complete in May. They offer 120 pet-friendly rentals located in Garden City and Garden City Road and Cambie Road. Of course, as more details become available, we'll keep you updated.
Yeah, well, thanks for being so on the pulse, Alan. Now, shall we jump into today's rental feature?
Yeah, let's jump right into Rhythm. Get the rhythm going here by Alan Mann and the Polyco group of companies. Now, Alan, what can you tell us about this rare rental opportunity in South Surrey that is also pet-friendly?
Yeah, really excited to share about this one. So it's located in Grandview Heights neighborhood. This is the only active leasing new purpose-built rental development in South Surrey right now. Currently pre-leasing, it stands out not only for its location, but also for its unit mix.
Yeah, so what kind of unit offering are we looking at?
The unit mix offers something for everyone, ranging from studios and one and den layouts to a variety of 2 bedrooms and 2 bed and plus den options, as well as 2 and 3 bedroom townhomes.
Yeah, townhomes in this area for rentals are very, very rare, particularly within the purpose-built rental space. So even the newer investor-owned product, as most buyers occupy their townhomes rather than rent them out, I think that those are going to be really attractive.
Exactly, Britt. And what makes these townhomes even more appealing is that 12 are in a separate standalone building, while the remaining 7 are integrated into the main condominium building at ground level, offering a range of layout options to choose from.
So townhomes will be a great option for families. And can we talk about the area? Located on 24th Avenue, Rhythm is a short walk or less than a 5-minute drive from Grandview Corners, offering a wide range of retail, grocery options, restaurants, and more. I mean, this has been attracting people and attention for a while now, this little nook.
That's right, Suze. And current residents of South Surrey are already highly committed to this location. And the security of a purpose-built rental building will be a key draw compared to an uncertainty of investor-owned unit. Not to mention, Rhythm offers a fully equipped fitness center, a social lounge, and expensive outdoor space with a seating area.
Yeah, and of course, the development team is a real bonus for this project. Now, the Alaman is vertically integrated development team, and they are going to be doing the property management as well. They have deep roots across development across the Lower Mainland and in investment, asset management, and has a strong focus on execution. Now, Polyco Group is also a privately owned real estate investment team, land development, and property management firm within BC. They have a strong standing as well within the British Columbia, particularly Fraser Valley and Alberta marketplace.
Yeah, good point, Britt. Now, where can we find out more information and what's the current status of the project?
Pre-leasing at Rhythm is now starting at $1,500 per month, and you can find more details at rent@rhythm.com.
I keep wanting to move Rhythm, we should.
You want to dance,
we,
Rose?
we should dance. I think we should dance. Following the segment though. Okay, moving on now from the dance competition here. What can you tell us about the rental market last month based on the rental tracker?
Yes, let's take a look at the purpose-built rental apartment and investor-owned rental condo that have completed within the past 5 years. Average rents were relatively flat month over month, increasingly marginally from $26.52 last month to $26.56 this month. On a price per square foot basis, rental listing averaged $3.85 per square foot, down from the $3.99 from last month. Overall, we're still seeing some softening month over month, but there does seem to be an early sign of the market starting to plateau at the current asking levels.
Yeah, that's true. And with incentives layered on top of the asking rents, it's becoming harder to pinpoint, where effective rents actually are landing, similar to the for sale market. But the bottom does feel near right across the board. Now, what changes are we seeing amongst the submarkets this month?
This month we saw some movement in the chart in terms of which submarkets are leading on average rents. Downtown Vancouver has moved back into the top position with average rents just under $3,500, surpassing both North Vancouver and Vancouver West. In addition, unlike last month, all submarkets are now sitting below $5 per square foot, whereas Vancouver West was above that threshold last month. On the flip side, Vancouver East moved down the rankings this month with average rents just over $2,500 per month. It is now sitting below both Burnaby and Coquitlam based on the current set of listings acquired.
That goes with the deal.
Yeah, now speaking of moving across the board, how have average rental rates changed when we look at a broader view over the past 3 to 6 months?
Yeah, from our tracker, rental rates are down about 2.6% over the past 3 months and down 2.1% over the past 6 months. Overall, it suggests continued softening in the short term, though the pace of decline is relatively modest and starting to show signs of stabilizing compared to earlier movements in the market.
How do these changes break down when we look at each submarket individually?
Yeah, looking at the breakdown by market, the 3 Vancouver submarkets with the highest average rental rates, so that's downtown Vancouver, Vancouver West, and North Vancouver, all posted increase over both 3 and 6 month periods. In contrast, the remaining markets saw decline, led by Vancouver East, which was down about 12% compared to 3 months ago. This reflects stronger demand in central, well-located areas and continued preference for high-quality rental product, while more value-oriented submarkets have seen greater softening.
Yeah, and I mean, let's be serious. It's very hard to beat the downtown core as we head into spring and summer. Just driving in today, it's so beautiful. You're close to the water, the seawall, key amenities, naturally just keeping, the Vancouver submarket above its competitors.
I feel like all of our East Van people, though, are like, you know what, that's fine. You can reduce my rent, and we know that East Vanners love East Van,
Yeah,
so,
true.
they're just fine.
They're on the drive somewhere on a patio.
Exactly.
Sipping sangria.
Laughing at the rest of us.
And laughing at the rest. Exactly.
All right. Do you know what I think that is a great idea? I might head down to the beach right now, or maybe a patio. We'll see. Now, in the meantime, make sure to hit subscribe so you don't miss the next episode. If you know, you know. If you haven't already, be sure to check out our Newswire, a daily email roundup of all the breaking news in the world of real estate.
I will be right behind you. I will follow you out as we leave here. We'll go grab a drink somewhere on a patio, guys. Yeah.
Awesome, and don't be surprised if we're filming from the seawall next month. See you then.
I hope so.
Me too.